Let's also start taking all of your stock related queries. Before we do that though, let's take a look at the number that you can write to us at. Mention the buy price for the stocks that you're already invested in. For the ones that you hope to be invested in, do mention the time horizon that you have in mind. There you have it. That's the number that you can write to us at. And we do also have our guests already connected. Let's kickstart the show, start taking all of your stock related queries. Then G. Chokalingam, founder and head of research, economics research, joins us on the show as well. Firstly, I wanted to take the first query to you, Mr. Chokalingam. A very good morning to you. I wanted to ask you about HPCL or BPCL because we do have Mohit from Ludhiana writing to us about both of these counters. Which one of these two counters do you think is better for the next 3 years in mind then?
If you ask me between these two, BPCL is better, but I am not that bullish on oil marketing companies due to the huge volatility in the oil prices and possible inventory impact. But otherwise, between these two, BPCL is better.
So that's the take on that. And Mr. Chokalingam, now that you're here with us, morning, hi, first of all, and share with us your outlook on ITC Hotels. That's the next query that we are getting from our viewer, Mr. Nikhil Sharma, who holds 100 shares of ITC Hotels at a price of 205 with a target. He's asking what are you spotting and what would be the right time to exit the stock? Or would it make sense to continue to hold on to the stock? We've seen steep cuts coming in on IHCL at least today, at least at the start of the trading session. Given everything that's been happening on the geopolitical front, travel and tourism, hospitality, hotels is a sector that is largely under threat and faces direct immense pressure. Give us a sense of what you are making of the entire hospitality space, and if you had to put your money on either of these names, would it be IHCL or ITC Hotels, your preferred pick?
Yeah. I would, between these two, I would prefer ITC Hotel. Of course, more or less both are fairly valued at the same level. Not much difference in terms of EV to EBITDA. I would prefer ITC Hotel, but again, as I mentioned, both are quite elevated in valuation, but that was justified before, the border tension. But this is a slightly negative for hospitality sector as a whole. So for medium to long term, that is beyond 1 year, if one wants to invest and wait, then ITC Hotel is better. It is having a good amount of cash. Parent has left cash with the company, and secondly, a lot of expansions are taking place. So for investment horizon of 1 to 2, 3 years, I believe ITC Hotel is one of the best hotel stocks.
All right, then that's a take coming in as far as the hospitality space then is concerned. The next one that we actually have, Mr. Chokalingam, is coming in from Girish Ayo, who's writing to us from Trivandrum, wants to know about 2,500 shares of Avanti Feeds bought at a price of 920 rupees thereabout. What do you make of this particular counter as well?
Yeah. I would, give a hold recommendation in case if the stock goes up 5 to 10%, one can book profits in Avanti Feeds.
So sell on rise kind of call coming in for Avanti Feeds. Of course, the sector has been in focus ever since day one of the tariffs that we've heard, that announcement coming in from the US. You had a couple of these shrimp exporter names that were also in deep pressure. But let's move on to the next query. And Mr. Chokalingam, our viewer Ram is writing to us from Mumbai, holds 125 shares of RECC at a price of 540 rupees. He's asking for your view for the next 1 year. Would it be prudent to continue holding? We just heard the management in an interaction, in an exclusive interaction that they had with us. What's your outlook on RECC as we go ahead for the next 1 year?
Yeah, certainly, beyond 1 year, it is a good to hold only. Stock is already down 40%, and post latest results, it is trading at 1.3 times, which is quite fair for medium to long term investment. But in the short term, I am not sure whether one can make a significant return because even the banks which have got access to low cost deposits are trading at around 1.1, 1.2 times. Some of the large banks even trade at a discount to book value, adjusted book value. So those banking stocks would do very well in the short term, short to medium term. But REC is a good to hold for medium to long term for the two reasons that it is already crashed to 40%, and secondly, tactically it always bounces back and it gets re-rated once in 2-3 years. So for medium to long term, it's a hold.
And that's a whole recommendation coming in as far as REC then is concerned. We also have Kunal Bothra joining in on the show to take all of your stock related queries. Kunal, a very good morning to you. My query to you coming in from Krish, of course, is coming in on Bluestar, 150 shares at a buy price of 1,800 rupees thereabout. What do you make of this particular counter? Because he's currently sitting at some losses when it comes to this particular counter.
I think it's a stock which I believe is still into a downtrend. Looking at the chart so far, the stock is now on the verge of breaking a fresh swing low, just below the previous major supports, which I think was around 1800 mark for Blue Star. It's a stock which is still into a downtrend. So I think in that context, I would suggest an exit on Blue Star.
Exit on Bluestar on the charts. Kunal, welcome to the show. And Mr. Chokalingam, I'm going to come back to you because I'm also wondering about a fundamental view when it comes to Bluestar. You know, Bluestar Voltas came out with its numbers very recently, right? Now, mixish kind of set coming in from both of those companies. Today, we have a brokerage downgrade coming in on Voltas as well. Tell us if you had to compare both of these names, right? Because we've seen summer right now, and you also have the factor of erratic monsoons that have just come into play and are playing spoil spot to the company's summer demand. Also, help us understand between Bluestar and Voltas, if you had to bet on for, let's say, the next 1 year, where would you be putting your money? What's your preferred pick?
Bluestar is better. I saw the results. It is quite decent. But only problem is that tactically, these stocks flare up just before monsoon. Sorry, just before the summer. And now, there is an expectation that monsoon can come early. So this is generally negative for these kind of stocks. So I would say that one can always wait for one more quarter to make any fresh purchases. Otherwise, Star is better, and that can give you a decent return in the medium to long term.
All right, and that's a take coming in as far as Voltas and Bluestar are concerned. Tell you what, Kunal, I'll come to you with the next one. Tell us about, of course, an investor who's written to us has not mentioned his name at this point, but he's asking about 100 shares of HDFC Bank. Buy price is around 1,400 rupees. What do you make of this particular holding?
Yeah, definitely a hold. Again, I think if the view is from the long-term play, then I believe HDFC Bank is a good stock to hold on to. We've seen how the stock has behaved in the last 3 months, 6 months, where at one point of time when the markets were going through sharp correction, and many of the mid caps, large cap names, they fell through a 30 to 40% kind of a correction. That was a time where HDFC Bank managed to outperform. And then the best part about the charts is over the last 3-4 years, the stock has been sideways. So it's coming out of a 3 to 4 year kind of a grind for HDFC Bank. It could just be a matter of time, that the stock over the next 3 years would start to get back into a big outperforming kind of a zone. So if you're a long-term investor and you're looking to build your portfolios around, large cap names and solid large cap stocks, in that context, I would suggest a hold on HDFC Bank.
Okay, so that's the take coming in on HDFC Bank. We now have more numbers coming in on the AMFI front. Let's understand what the mutual fund picture has looked like for the month gone by. Net inflow has come in at 2.76 lakh crore versus outflow of 164 lakh crore on a month-on-month basis. Equity inflow has taken a slight bit of a hit, coming in at 24,269 crores compared to 25,082 crores on a month-on-month basis. Total AUM, however, has gone up. It's coming at 70 lakh crores compared to 65.7 lakh crores on a month-on-month basis. So at least some resilience is being seen on the total AUM front, while equity AUM seems to have taken a little bit of a hit. We'll also have some more information coming in on the large cap inflows that we've seen, as well as the broader market inflows. Well, we just have the net inflow number right now. That's in quite a coming in. That's the outflow. Inflow at 2.76 lakh crore versus outflow of 1.64 lakh crore on the month-on-month basis. So a net inflow is what we are looking at right now. Let's try and see if we've got some more numbers, but that's all we are working with right now. But well, yes, that's what the AMFI data is looking like at the point, Shansi.
Well, absolutely. And tell you what, let's also move on, continue taking, in fact, all of the other stock-related queries that are currently pouring in. The next one, Kunal, that we have is coming in from Ramesh, who's writing to us from Hyderabad, wants to know about Route Mobile, 60 shares at a buy price of 850 rupees thereabout. What do you make of this particular counter? Because he's invested for the long term, wants to know if he should be booking profits at this point in time.
Yeah, I think it makes sense to book profits into the stock, because of the way the stock has been trending. It's still into a downtrend. When you look at this over the long-term charts for Route Mobile, the stock is struggling to even break past about its 50-day moving average. There was a point in the last 1 month where in the month of April somewhere, the stock was trading marginally above its 50 moving average, but that lasted for just about a couple of trading sessions, and the stock went through a correction yet again. So a stock which still looks like that the selling pressure is intact in that chart context, I would suggest that it makes sense to book profits of on Root Mobile and look out for parking money back into solid large cap names.
Mobile. Mr. Chokalingam, we'll come to you, and Praveen Kumar is writing to us from Bangalore. He's planning to buy 25 shares of Tata Steel. Would that be a prudent decision to make? Would that be a good move in the market right now?
I am negative on metal sector, particularly steel, for two reasons. One is all of us know that the tariff war initiated and the steel is going to be one of the most affected. And secondly, the tariff war is slowing down the growth across the world. Many economies, major economies are downward. That is also negative for metal stock. So I would, suggest avoid trading for Tata Steel.
Avoid, as far as the recommendation from Mr. Chokalingam is concerned, Kunal, I'll take it across to you when it comes to Tata Steel. 25 shares is what Praveen wants to buy. What do you make of this particular counter? And also, are there any levels that you have in mind if that's a yes coming in from you?
See, I think the only level which I would look out for Tata Steel would be the 200 DMA. That level for Tata Steel, I think if I'm not wrong, is around the 148 mark on the spot levels. I would suggest that if you're looking to buy the stock, you should look to buy this once the stock sustains above 148 mark, which is the 200-day moving average. Because historically also the stock, whenever it stays about 200 DMA for say a couple of weeks, the trends for Tata Steel has improved significantly. And I think that could be a litmus test for the stock even this time around. So would suggest a buy above 148 for Tata Steel.
Okay, so those are the levels to watch out for on Tata Steel as well. So that's the combined view coming in on Tata Steel. Mr. Chokalingam, I'll come to you. Next stock in question is NCC, and our viewer Mahalakshmi is writing to us from Hyderabad. She's holding 750 shares of NCC at a buy price of 235. She's asking if she should be adding more for the long term. What's your take on NCC, and fundamentally how is this placed?
Yeah, it's a quite decent stock, and stock also has corrected a lot. So yes, on any possible further decline, it's a good to buy for medium to long term.
That's a good buy coming in from medium to long term, and that's NCC that I'm talking about. Tell you what, Kunal, the next one that we have is coming in from Jacob, writing to us from UAE. Wants to know about L&T, wants to buy 25 shares here as well. So 25 seems to be the lucky number. Tell us about what you think about L&T for the next 5 years in mind.
From long term, L&T is fantastic. We've seen the stock riding the worst phases of the market in the last 2 decades, and then showing signs of classic outperformance as well as long term uptrend. I think at current levels also at 3,400, 500 mark for L&T. After this 20%, 25% correction, the stock has shown in the last 6 to 9 months or so. I think it's a good level to buy L&T, even though the stock is up maybe some couple of percentage points today.
Okay, so that's the view coming in on L&T. Let's move on and talk about the next query that our viewer has written to us, and that's on that's a couple of stocks in fact, and our viewer Mr. R.K. Ahuja has written to us. All of these stocks are in question from a 2 years time frame. Mr. Chokalingam, we'll come to you. He's asking if he should be selling ONGC, Dabur and Titagar and buying into Persistent Systems, MGL and Sudarshan Chemicals. Lots of stocks, 6 stocks that he's spoken about. Which one of these do you like right now, and which one of them would be an avoid? ONGC, Dabur, Titagar, MGL, Sudarshan and Persistent.
Yeah. So Titagar is good to hold after a massive fall. Yes, FY26 budget for railways are not increased significantly, but then definitely it should be made up in FY27. So therefore, with 1 year perspective, one can hold, and in case it falls, one can buy. ONGC I would avoid because of the oil price already crashed to 25%. Along with that, gas price also highly correlated, and there is a fear of further slowdown global economy. So therefore, I would avoid. Dabur also I would avoid because a couple of days back we saw the CEO of one of the biggest FMCG companies said that the consumer demand would revive in next 12 to 18 months. So it's very bit of negative, shocking statement. This FMCG were hoping that it will soon recover, but the industry stalwart himself acknowledges the kind of pressure. So therefore, one can look at something in banking stocks. Persistent is slightly elevated. I would prefer Cyient for cheaper than Persistent. And Cyient has got a better opportunity because at a consolidated level, it has got three verticals. One is a standalone software, and second, Cyient DLM, which is focused on engineering business. And third, they started 100%
Right.
subsidiary for semiconductor. So I would
Point
prefer
taken. Yes,
Cyient to Persistent.
got it. Thank you so much. Thank you so much, Mr. Chokalingam, as well as Kunal, for joining in and answering all of those stock-related queries. But with that, completely out of time on this edition of Buy Now, Sell Now on ET Now.
If you like this video, then like, share and subscribe to ET Now.